What's up everyone, it's Caddy with Money Vesting. Welcome on board for another Market Open live stream here. So we are ready to go. SPY is up over 0.5% right now. We've got QQQs up over 40 basis points and the Dow Jones pushing up over 0.5% as well, with the yields back over 3.2%, up almost 1% on the day right now. We got volatility here slightly down a little bit over 1%, but still trading just over 25 levels. And then we've got oil prices also. Well, natural gas is kind of rotating back down about 4.5%, just trading under 840. And then oil prices here kind of also a little bit lower, just under $88 per share at the moment, trading at just under $88 per barrel actually. So they're just trading at those levels at the moment, just coming down to a very, very important key level of support that we've also been paying attention to for a long time. So this right here is going to be that support level for oil. Thank you so much for joining, everybody. Welcome on board. Happy to have you here. New week, shorter week. Happy Labor Day weekend. Of course, you had, hopefully you had a great long weekend. And we are ready to obviously get started with the markets here. A couple new catalysts that I added for everyone. So, there's going to be the Apple event that happens on September 7th. So that is going to be on there. And then, of course, we've got Jerome Powell's speech as well later today. This was a new addition that I added in the calendar. So that is available for everybody. That's going to be on September 8th. That's going to be a Thursday. And then apart from that, we do have earnings. So we have GME, RH reporting. We've got UiPath reporting today after the bell. And then DocuSign, Zscaler, and then of course Kroger is also reporting on Friday before the market opens. So going over to some of the conferences. So market sentiment is a mess. CEOs this week will give investors a peek at the latest earnings trends. Second, the European Central Bank also meets on Thursday, with a lot of people betting it will raise euro area interest rates by 0.75 percentage points, so 75 basis points. But the biggest series of events may be the start of a conference season. September is the month when hundreds of companies speak at sell-side conferences. A lot has potentially changed since many companies last gave updates in mid-July. And conferences after Labor Day is going to be Barclays Global Consumer Staples Conference, September 6th and 8th. Evercore ISI Technology, Media and Telecom Conference, September 7th. Wells Fargo Healthcare Conference, Citi Global Technology Conference, and Goldman Sachs Retailing Conference, September 7th through 8th. So these are all the conferences that are going to take place this week, and we'll break them down as soon as there's updates. So when they come out, I will put summary videos out, what was discussed, what were the key takeaways from these conferences as well. The American Association of Individual Investor Sentiment Surveys, so AAII, reflects that a roller coaster of a market sentiment. So right now, the question was, are you bullish or bearish on the markets in the next 6 months? Only 21%, 22% people said that they are bearish. They're actually bullish on the markets over the next 6 months. Bullish only 22%, and the historical average has been 38%. So you can see how the sentiment has really been very weak for the markets. And when asked about bearish, over 50%, right? So over half of the participants mentioned that they are bearish on the markets over the next 6 months, and 27% said neutral. So we're gonna take a look at our polls from today as well, from our market polls, but this is as of the American Association Individual Investor Sentiment Survey. And last week, investor pessimism jumped to an 8-week high after a brief period when sentiment had been improving, and bullish sentiment is unusually low, and bearish sentiment is unusually high at the moment right now. So going over to some upgrades and downgrades, by the way. There was some more updates from Mike Wilson from Morgan Stanley. I was listening in earlier on CNBC, and they mentioned that Mike Wilson is calling for another revisions downgrade for many companies in the months to come. In other words, earnings will get revised down for the S&P 500 in the third and fourth quarter. And if that happens, that's going to leave for more room, potential downside for the S&P and the NASDAQ and just the markets in general for the coming months. So that's something to keep in mind. Morgan Stanley upgrades Nextera Energy to overweight from equal weight. Wolf upgrades Tesla to outperform from peer perform. We got Citi downgrading FedEx to neutral from buy. JP Morgan reiterates Amazon as the best idea. And then Bank of America initiates Lumentum as buy. And then we got JP Morgan downgrading Discover to neutral, and then JP Morgan also reiterating Apple as overweight. Bank of America initiates Dropbox as a buy, and that pretty much wraps up our pre-market update. So let's see where the polls are. Let's see what everybody's thinking for on the day here. So we've got 57% expecting the markets to be green. And then we've got about 32% expecting the markets to be red and about 10% flat. So there is a lot of optimism, a lot of bullishness in the in our chat. So I like that. And also make sure that you drop a like. We've only got 32 likes. Let's see if we can actually get this number back up to over 100, 200 levels. So thank you so much for joining, everybody. Good morning. Good morning. Let's see. So again, good morning here. So October till 3rd February. All right, perfect. So yeah, 10-year yields is the one to really be paying attention to. We're kind of creeping back up over the 3.2, 3.3%. That's good. That's putting some downward pressure on TLT, right? That's the bond prices because they move in inverse correlation with each other. So yields definitely on the way up, 3.5%. That's going to be the peak from back in June. Over the weekend, I also broke down what Kathy Wood said at ARK Invest. Very interesting updates. I also broke down what Mike Wilson has mentioned from Morgan Stanley. We talked about the earnings from the S&P 500, second quarter earnings estimates from FactSet's report. A lot of discussions pretty much over the weekend. We talked about a lot of things. So given where we are, this right here is going to be the valuation for the markets. Again, we know exactly where we're sitting from a price earnings standpoint. We're trading at just over 17 times earnings based on $39.24. That was the Friday's close for S&P 500, and $226. That's already been revised down, by the way. So we're already down from $230, and we're already down from $250 down to $243 for 2023. Now, Bank of America had already cut their guidance down to $218 and $200 respectively. So according to their estimates, we're still trading at pretty much 18 to 19 times earnings. I think the big next few months are really going to be what earnings are going to look like, right, for 2022 and 2023. Or are we going to see any type of revisions on the downside, or if we're going to stay steady, if earnings are going to stay strong? That's, I think, going to be the big question, because now we're really going to get into a point where interest rates start playing a bigger role, right? They start impacting economic activity and the flow of credit a little bit more aggressively than what we have seen in the first 6 months. And to begin with, interest rates were really low. And even when we got up to over 2% right now where we're sitting, we still haven't really, gotten to a real interest rates that are positive, right? So these are still very, very, I would say, supportive of economic growth, 2%, 3% from historical measures. So as the Fed continues to front load rates and they continue to kind of raise them, they're going to have a bigger and bigger impact on economic activity, on unemployment, on earnings growth, all those things. So that's going to be the real question now moving forward. All right, so let's see here. Yeah, so Junkman says, note, natural gas has taken a dive downwards. My understanding is that the EU has enough natural gas to get through the winter. Does anyone have any news on this? Yes, so I think you bring up a great point. I've been reading over the weekend on natural gas as well. So right now it looks like it is selling off. I think it was down about 4 or 5%. Natural gas futures are down 4%. So we're seeing a pretty significant dive on the way, a little bit lower. But you're right. I think they are, for Germany specifically, they're up to 85% of their storage is complete. And that's kind of like ahead of their November 1st deadline in order to prepare for the winter. And the other 15%, I was reading that the US is going to provide LNG, liquefied natural gas, to Europe to kind of facilitate and of course, accommodate for the rest, which they're not getting from Russia's Nord Stream pipeline 1. So, and of course, I think Putin's also mentioned that the only way they're going to resume this is if the West releases or kind of lifts all these sanctions that they've put on Russia, which, I find it very unlikely that they're going to do that. It's just that they need to find another alternative to Russian gas, which I think they are getting closer to completely being independent and not having that reliance on Russian oil and gas at the moment. So right now we are seeing a little bit of a pullback. But again, we'll see what happens in winter, right? So Oscar says US can't provide anywhere near enough for the EU. There's no capacity. Well, we'll see. They have already mentioned, I was reading it over the weekend, that they're already providing some LNG, liquefied natural gas, which is a lot more expensive though, but Germany is willing to pay for it. They only need 15% more to kind of fill up their storage and prepare for the winter. Nice work on NXPI. I'm glad you included in dividend in your fair market valuation. Yes. So yes, accounting for that 2% dividend, I thought it was fair to account for a 10% discount rate and not the 20% because they do pay a 2% dividend yield. So just considering that, I think NXPI does have a lot of potential, but it just obviously needs to have that consistency in their net income growth, and at the same time, obviously the intrinsic value would be a lot lower. If the growth accelerates in the future, if the company can actually grow at a much higher price, much higher rate, and then the valuation expand, then absolutely it's going to be much higher intrinsic value. But analysts right now have them pegged at about 11% growth. I had them pegged at around 10%. So So natural gas prices are sky high at this point in EU. Look at the price per megawatt hour in the market, and in the Netherlands, gas storage in many countries is very small. In Germany, needs a lot of gas for industrial. I mean they've already talked about. I mean Kyle Bass talked about how 8x to 10x increase month over month for energy bills, electricity bills. So that's really, really unfortunate, and of course a huge stress point for European Union in terms of where electricity and power and gas bills are. And in the winter time, there's going to be a lot of rationing, and that's expected to even go higher. So maybe I'll do like a more detailed analysis on on the entire sort of energy crisis that's going on over in Europe, and then kind of go over pretty much all different hydrocarbons and fossil fuels, and kind of give you an overview, bigger picture stuff on natural gas and oil and electricity and all that stuff, and what it could look like in the winter time, and which companies are best positioned to kind of benefit from it. Of course, it's kind of like some obviously tragic news sometimes does lead to some companies benefiting, but we gotta look at it from both perspectives. Obviously, it's really, really bad that some people are going to end up paying 8 times or 10 times more for electricity and power and whatnot. But then, there's also companies that might benefit from it. So it's kind of like, in the markets, it's always like that. Even during COVID, right? COVID, many people were struggling, unemployed. People were obviously getting COVID, and they were, passing away. And then there were some companies that are obviously benefiting from COVID, right? A huge increase in revenues and all that stuff. So, all right, so let's just set up for market open. I'm going to open up our individual stock charts. We'll see, where we are from an individual stock standpoint. So, very good idea for this video on energy. Please look at the prices in the Netherlands, the main market. This is the baseline for EU. Yes, I'll definitely do that. Thank you for that, and I'll definitely see if I can, put forth a more detailed analysis on the whole energy situation that's going on in Europe. Yes, Brandon, let's just check out the 200-day weekly moving average. I think that's really, really important for the Nasdaqs, because on the weekly chart, we're actually coming down to almost that level, 11,000. So this right here is that level, 11,000. That's going to be very, very important level to watch on the Nasdaq. So we'll see, how this week kind of trades. We're already starting to kind of see a bit of a pullback pre-market, right? So QQQ is starting to roll over a little bit. It was up to $298, almost $300 pre-market. We have pulled back about 65 basis points, and so is the S&P 500, so is the Dow. So again, we'll see how today and remainder of this week kind of trades. But 11,000 by far, very, very important technical support. I mean, if the bulls need any type of strength and some momentum here for the Nasdaq, they absolutely need to hold through that 11,000 level. And on the monthly chart, I believe that's going to be the 50 EMA. There we go. Yeah, so we perfectly got bought up from that 50 exponential moving average as well for the Nasdaq. So, and that's going to be sitting at 11,100. So I would call for 11,000 to as much as 11,189. That 200 point buffer in the Nasdaq, a very, very critical area of demand, and kind of like a bull sort of range where it needs to get bought up. If it doesn't, then it's going to be a pretty significant breakdown from a technical standpoint. I mean, the bears would pretty much just take over and will be in control. So, Marish, Caddy, do you think 150 fair value for Tesla is too low? Well, 150 Tesla fair value is based on a 50% growth rate, and actually it's based off of 40% growth rate and about 35 to 40 times P multiple, right? Which gives us a PEG ratio of about 1. So, unless we're expecting Tesla to grow earnings by over 100%, by the for the next 5 years, and for them to trade at about 50 to 60 to 70 times earnings for the next 5 years, which both of those scenarios are possible, but also very aggressive. For me, 150 to 175 is appropriate. I actually ended up selling cash secured put on Tesla the other day, last week, with a 190 strike. And if I do get assigned, that's going to be after the premium, I'll be sitting in the low 180s, which will allow me to kind of nibble in at that price and allow me to dollar cost average more aggressively the lower the price gets to. So that's where I'm at with Tesla. I mean, if it doesn't come down, that's okay. I mean, I can just simply sell cash secured puts on the company and wait. That's one of the best ways to buy a stock, right? I wouldn't necessarily just go out in the market and just start buying stock. I would just always look at selling cash secured puts first, because you're literally getting paid to wait for the price to come to you, right? So yes, so Qualcomm, I will do a video on them very soon. Right now they are coming down to a very, very interesting support level. So there is a possibility for a trade idea on Qualcomm as well. You're absolutely right. We'll take a look at this. The lower it gets, the better the deal becomes. I would prefer this at 117, 118 levels. So we'll be looking at, maybe this is a stock that I can, maybe sell a cash secured put on very soon. So we will take a look at Qualcomm, the lower it gets. Shopify is another one that's potentially forming a good sort of trade opportunity here. Right now, just up over 27 basis points, but we'll see how it trades today, whether it breaks down below $30 or not. So, NMA, strike was 190. I actually got about $8, $7 in some sense in premium. So I got about a little bit over $725 for selling that cash secured put for 190 strike. That's about 3 months out. So that's expiring in December. So that's where we are. QQQ is getting a little bit of a pullback here. So just getting a bit of a sell-off here. So is the SPY. And the Dow Jones also just getting a little bit of a red candle here. So Apple going to be over here, up over 44 basis points. Meta is down about 13. Tesla is up about 0.5%. So 280 is still going to be that resistance level to pay attention to. And Nvidia is down to 137 right now. Nvidia definitely has a very, very nice trade opportunity in the low 120s. So that's something I'm really paying attention to for Nvidia. All right, let's take a look at the poll here. We've got about 3 minutes for market open. And we are at 55% expected for the markets to be green today, 32% expecting the markets to be red, and about 12% expecting the markets to be flat. So lots of optimism here and lots of bullish sentiment for the markets. And make sure that you drop a like. Let's see if we can get to at least 200 likes here so that this, obviously stream gets pushed out to more and more people. Helps out the channel, helps out the algorithm, fuels the algorithm. All right, long weekend is over. I was looking forward to this day. Long weekend, it starts to get real boring for me, So we are ready to go. So SPY right now has got a really strong support at 390, right? So this right here is going to be that level to watch at $390. So this is the level that we're really paying attention to for SPY. We're expected to kind of gap up a little bit. And again, we'll see how we trade on the 15-minute time frame. $399, $400, very strong resistance up there for SPY. So this is going to be the level to really pay attention to as a resistance on the day. And then a support level sitting roughly at around here. And that's going to be sitting roughly at around $390 to $391. Brandon says, I enjoyed this long weekend for once, 3 days of not losing money. Yeah, if you're bored, you can make some YouTube videos. That's what I did. All right, so let's see. For AMD or Google, if you could buy one, which do you prefer? So Steve, great question. In fact, Kevin, one of our members, also asked me this question over the weekend. It's a pretty tough call, I would say. Really depends very much on the time horizon too. I mean, I think AMD's got a lot of potential. Well, it's got long-term potential as well. I'm talking like extremely long-term, but 3 to 5 years, I do think that AMD is positioned for really strong growth. And Google may struggle because of advertising slowdown and advertising demand kind of pulling back. So Google, I would consider for like the next 5 to 10 years out, which, you know, meaning that it may not show profitably, may not show gains, 5 to 10 years out. But AMD, I would pick for shorter time frames, 3 to 5 years. So it's really difficult for me to pick one. I would pick both, obviously, but AMD for shorter time frames, 3 to 5 years, and Google out 5 to 10 years. All right, so we are open now. S&P 500 is up over 30 basis points. We got the NASDAQ up over 26 basis points, and the Dow Jones is up over 108 points, so pushing higher a little bit. The 10-year yields is really kind of scaring me. I don't know about you guys, but we are definitely seeing a lot of momentum for the 10-year yields. We're about to crack above our highs from September 1st when we got up to as much as 3.295%, so 3.3%. So we are definitely making some big moves on the 10-year yields. This is going to put some pressure on equities. Eventually it will. It's going to start competing against the earnings yield, the dividend yield of the S&P 500. This becomes a better risk-free alternative for investors. So that is something to really be paying attention to as well. And of course, the SPY opens right above here. 390 is still going to be that support. And we've got the QQQ also opening with a very nice support at 293 that we need to watch for. So resistance all the way up to 302. And this right here is going to be that support level, at least on the day, that we need to pay attention to, is around 293. So NVIDIA, big red candle coming in, down to now under 137. Pretty much flat on the day so far. Tesla is also flat. We got Meta also flat, and then Apple only up about 0.5%. Right now. So lots of stocks are just more or less flat. If NVIDIA ends up having a really, really red day, I'm thinking about selling a cash secured put on NVIDIA today. So that's one idea that I'm planning on for NVIDIA, because the lower it gets, the better the deal becomes for me. I will be kind of sharing the details of the expirations, the strikes, and all that stuff in the Discord later. But this is one stock that I'm considering today. Good premiums, not as much as Tesla, but good premiums on NVIDIA. Yeah, stocks don't like the high dollar either. So let's take a look at where DXY is. So DXY, again, the dollar index, 110. We've got an environment where both the dollar and the yields are going higher. Man, yeah, this is a very tough market for equities. You've got dollar at pretty much a significant peak. 120 is the level from, I believe, the dot-com bubble, right? 2000, 2001, the dollar index was all the way up to 121. We're like, it's such a massive breakout from this double top resistance and double bottom support. We just kind of like had these falling wedges, and then look at this rally. Just incredible for the dollar coming in since like May of 21. It's up 22, 23%. So in an environment where both the dollar index and the bond yields are pushing higher, yeah, it's kind of like a tough market for equities, at least for right now. Shop is diving. Yes, so Shop is, let's take a look. If market starts rotating back down, then yes, there's not going to be a trade opportunity, because this is a big breakdown right now for Shopify in play. So right now it's starting to kind of break below the support level. So I would be very careful. Again, we're starting to see a little bit of breakdown. This is the first breakdown that's happened in the last 6 times it's tested this support. So I would be very careful here. And that's why it's a very, very low risk, high reward potential, right? If it does see a breakdown, I'm out. There's no long trades here. Oscar says flabbergasted about the dollar keeps going up. I know the dollar, and then again, of course, against the euro again dips below 1. So we have seen once again some weakness in the euro. It's down to 0.989, and the DXY up to 110. Just insane how much it just keeps pushing up. So NASDAQ is flat. We did see a little bit of momentum here. at least in the pre-market, and we got up to as much as 11,679, but we're now flat. S&P is up over 26 basis points, so still pushing up, at least for now. And the Dow, 41 basis points. So if you take a look at the Dow Jones, wow, there's a lot of greenery on the Dow stocks here. Caterpillar up 1.2%. We got Boeing, American Express, Chevron, JP Morgan. All of them just really pushing up. Even Visa, Walgreens, we got Honeywell, Amgen, all of them pushing up. With only Procter & Gamble, Intel slightly down, but the Dow really doing well in this environment. So yes, so earnings on DocuSign are going to be coming up as well. So we'll take a look at them, when they do get released. So right now, I mean, DocuSign is once again hitting that lower low inside this sort of falling wedge. So, really oversold. RSI, MACD, very oversold as well. Let's take a look at the valuation. Not sure how the valuation is for DocuSign. Okay, so it's come down to under 5 times sales. I mean, at one point it was trading at 29, right? So if you take a look at where the price sales ratio was, 29 back in 2020, right? So almost 30 times sales. That's been dropped down to 11, and now it's trading at about under 5. So definitely, has come down to reasonable to low valuations. And like I said, if the earnings are better than feared, that can actually act as some type of bad news, good news type event where bad news can turn into good news for the market, for this stock. And I wouldn't be surprised if we do see a little bit of a lift higher on DocuSign, because the last couple earnings have just been brutal. The stock's been down like 20-24% every single time. So I think the expectations, the estimates are really, really low for this company. And if they report just some moderately better numbers, there's a possibility that it pushes higher, considering the technicals and just the historical trend for how it's done on earnings. All right, so we did get an alert from the 10-year yields. We're almost at 3.3%. In fact, the high for the day, 3.3%. Yeah, so this thing is really, really pushing higher. Yeah. So, 3.48, 3.5% is going to be that level to watch. And this could be because of the tightening, right? The Fed's tightening, and they're considering kind of reduce their balance sheet, and they're kind of letting all these mortgage-backed securities, although mortgage-backed securities don't really mature for like the next 5 years or so, they're going to have to actively sell them in the open market if they're looking to actually reduce MBS products as well. But most of this can be coming from the US Treasuries that are kind of rolling over. I think it was like $165 billion worth of US Treasuries maturing this month, or like in the next 15 to 60 days. So that might be one of the reasons why obviously it's putting a little bit of pressure on the bond prices, downward pressure on bond prices and upward pressure on yields. So yeah, 3.3% is where we are right now. Market seems to be holding up a little bit better. It's flat. It's not really moving all that much. So it is flat. All right, so QQQs just again consolidating sideways here, not really moving all that much. 293 is going to be that intraday support. And the SPY also just moving sideways. 390 is going to be that intraday support. Ooh, look at natural gas futures really coming down. We've got 5% drop in natural gas futures right now. So pretty significant drop here. But it still needs to drop a lot more before it can come down to, just where we were back in July. I mean, from July 2022, it's still up 57, 58%. Just an insane amount. So it still has a lot of room to fall before it can, stabilize a little bit, sub $5. All right, so let's run through the watch list here. So what's pushing higher the most? We got Dropbox. So Dropbox is up right now about 3%. So Bank of America came out and initiated a Dropbox as a buy rating today. So, they're pushing up 3%. Very nice. Then we've got Udemy pushing up almost 3%. We got DraftKings also higher. Southwest, We got S&P Global, Walgreens. We got Zim integrated shipping more or less flat here. ASML. It's very flat, right? Nothing really is up like a crazy amount. Of course, Dropbox is up 3%. Udemy is up 3%. Some of those names are pushing up 2 to 3%. But when we come down to reds and see what's actually moving down, we do have a lot of pain. We got Roblox down over 6%. So selling off quite a bit right now. Look at that red candle, just insane. There's no wicks, literally from where we opened now down to hitting new low of days for Roblox. Tencent's down 4%. We got Peloton down almost 4%. Alibaba back down to $88. So coming down to that support once again here inside this green rectangle. GameStop's down. Okta, AMC, Upstart also coming down to $23.50. So this might be another one that we can look at from a cash secured put standpoint. But Upstart is going to be inherently really, really risky. I mean, if we come down to December 16th puts on Upstart, oh my God, whenever this thing loads here, I'm just going to have to wait. But yeah, last time I had $20 puts, the returns were like 30+% return on collateral. It's an insane amount. So we'll keep a close eye on this as well. Because there's always been some support here at $22, $23 for Upstart. Then we've got JD.com, Roku, LABU down to 830, 833, 835. So I will be closing in on my covered calls on this one. Then we got Teladoc down almost 3%. We got Shopify now down to 29.30. So definitely starting to break down below 29.50s. That's exactly where the stop loss should have been in. No long trades for this one anymore. Because it's getting a little bit of a breakdown. Snapchat down 2.6, Marathon's down 3%. So yeah, I mean it's looking like it is going to be a red day, more or less, because the 10-year yields, somebody stopped the 10-year yields, 3.313. We're almost back up to from where we peaked back in June. So yeah, there's creeping up slowly and steadily. I mean, if you take a look at where we were 4 weeks ago, Nvidia goes ex-dividend tomorrow. I think Nvidia's dividend yield is like really, really small. I think it's like not even, it's like 0.12%. I don't think it's gonna sell off on that ex-dividend date. What's Tesla doing? Tesla just consolidating, not really doing much. Just under 272, 271 right now. So just 0.5% at the moment. So yeah, not really doing much. Forget my question, but how do the yields go up? So yields, pretty much interest rates are negatively correlated to prices. So if bond prices start to sell off, yields go up, right? So interest rates go up when bond prices go down. So they're like negatively correlated. So while QT's already started from the Fed, cost of credit, cost of borrowing is getting more and more expensive as the Fed is continuing their process of, higher rates and of course tightening and aggressive policy and all that stuff. So, and of course the reduction of balance sheet is putting a lot of pressure, downward pressure on bond prices. That's putting upward pressure on bond yields. So as that's going higher, that's theoretically that should put more pressure on equities. What looks like right now we're seeing a little bit of recovery here back up. We're more or less flat, and then now the Dow is coming down. It seems to be very, very indecisive from the markets, right? Which direction and which sectors it wants to do well, and versus what sectors it doesn't want to do well. Like, I mean, Dow Jones was pushing up really well, 0.5% green. Nasdaq was selling off, and now it seems like we're starting to kind of flip over with the Dow almost flat and almost red, two really red candles, and now the Nasdaq is finding some relief here. Chance to add more Google. Google I think is trading at a very attractive level. I was also looking at Google's cash secured put at about $100 strike, but it's the premiums are not really that high, surprisingly. I mean, it's for $100 you're getting $450, and that's out to December 2022. So $450 is going to be just over 5%, I believe. So 100 minus 450, 95.50. It's going to be, yeah, 4.7, just under 5%. And then for $90, it's going to be 225. I'm more interested in the $90 put for Google. So that's something I'll be looking at. Possibly this one, or like I said, for NVIDIA. If it does have a red day and if it continues to sell off, then NVIDIA is going to be on the radar for a potential maybe $100 down to 105 maybe. So Adobe, let's see how Adobe is doing. So Adobe and Visa are two quality growth stocks that I think are coming down to very attractive levels. These are definitely on my watch list. So Adobe's got some good premiums, right? So $300 paying you $8.30. That's something I would consider. So $291.70. That's about just under 3% in terms of return collaterals. So if you take a look at where we are for the SPY, we're kind of coming down to 390. We'll see if you actually validate that level or start to break down even further, and then Qs are starting to come down to support at 293. So those are really two important levels. So what's my buy price on Adobe? So I believe it was about 12 to 14% decline that we're looking for, right? So I think it was like closer to 315. Yeah, it was 315 that what I was looking at, and even down to 280s, like inside. Sort of like these two support levels is what I'm really paying attention to. And for Visa, I believe 192 was that level, but even 188 and lower would be very nice for Visa. So Zara, what's the status of the, well, Archdeep QQ is testing support? Yes, so QQ is testing support here at 293. That's the level they're really paying attention to. The status of the Fed's balance sheet, well, it is going down, but it's not going down as fast as what many people hoped, but it is going to start rolling over even more. So Shopify next support is going to be down to, well, if you take a look at this previous resistance area, I would watch $17, $18 for Shopify now. This right here, lots of consolidation inside this range, lots of sort of back and forth here. Then we saw a big rally, and that will be the next level to really pay attention to. Shopify has kind of validated the support 1, 2, 3, 4, 5, 6 times. In fact, this was the 7th time it was coming down to. And right, of course, we got that breakdown after 6 times. So yeah, so it's starting to break down below the support level. So there's definitely a lot of weakness for Shopify, and all the way down to $17, $18. Kanal, when it comes to the S&P 500 expectations, 3850 is going to be that next fib level to watch, and then of course the lowest target that I have on the S&P, well, the worst case target that I have on the S&P, we're going to be sitting at around 3200. That's going to be a drop of about 33%, or possibly, again, that's the worst case scenario, right? We could see as low as 2800, right? That's going to be about 43%. Now, of course, a lot of things depend on inflation, earnings growth, the severity of the recession that we're in. A lot of those things kind of matter when it comes to the overall market. If there's more uncertainty with the Fed, with inflation, with interest rates, and what's going on, then the markets are still going to be weak. But the more we get some more clarity on the markets, the more some of these clouds kind of go away, commodity prices kind of stabilize, inflation shows a very good print on September 13. We actually start seeing prices roll over consistently, and earnings growth kind of stays steady and strong, then yeah, there's going to be potential for us to see a bit of a bounce and start to see that recovery back higher. But until then, I think there's a lot of choppiness in the markets. There's going to be plenty of buying opportunities. I mean, the best thing you can ask for from the markets is just a 1 year of prolonged weakness, so that you can just continue to accumulate, right? You can just continue to accumulate. What would be a better situation, right? 1 year of accumulation and then having the biggest bull market we've seen, or prices getting away now and just going higher and higher and higher and higher, not giving us the opportunity to dollar cost average and accumulate or buy, right? So Arnold says not all of us have cash though. Well, then figure something out. I mean, is there the thing is that obviously I'm assuming most people have income, right? Most people have income coming in. Have a budget, right? Have a budget, figure out how much you want to spend on your necessities and your wants, and then of course have an emergency fund. We've done a video about this as well. And then whatever left over, obviously every month you can decide. In fact, I actually did a short video going over how to figure out how much you want to invest every single month and what that future portfolio value is going to look like depending on your rate of return, right? Arnold says, well, I'm in school, so don't have a job. Okay, well, fair enough. But well, I worked when I was in school too, so I mean, anything, I've done some different types of jobs to get by, obviously, but I'm sure people have. So yeah, so Justin says, do you want instant gratification or delayed, more prolonged prosperity? I think that's a great way to put it. The latter, I think, is much better. And you also mentioned that I want the latter. So I think that's really, really interesting, that prolonged. Because remember, investing is not just about a day or a week or a month or even a year, or even, I would say, a couple of years. I mean, it's a decade-long process where you're just like investing for a very long time. One of my favorite quotes from Warren Buffett, and remember when we had a tweet, I mentioned that share your best tweet from Warren Buffett. It goes something like, investing takes a lot of time, discipline, and patience. You can't force things when it comes to investing, right? So it was something like towards the end, it was like really funny and quirky. He says, you can't produce a baby in 1 month you can produce a baby in 1 month by getting 9 women pregnant, right? So that really was like very interesting, that you have to give it time with a lot of things. So Alex, been really in the market since 18 years old. I remember starting with like a Vanguard fund. So it's been about, I would say, like 7 years or so. David, what was my major? Finance. It was finance. I got my degree in finance, bachelor's in finance. It says that Elon Musk disagrees with me. There's a really funny meme. I think I shared it in our Discord as well. Elon Musk kind of FaceTiming his kids. He's got like 12 phones in front of him, FaceTiming his kids. Man, he's taken on his job of repopulating the earth himself. All right, so now we're seeing a little bit of a bigger sell-off. So Nasdaq here down almost 40 basis points. We got the S&P down 22, and the Dow also rolling over. The 10-year yields are almost getting up to 3.485%. We only need to push up another 5% for the 10-year yields to be back to that June high. Hassan says, Caddy, if I come to visit India, will you take me to a party? Well, you take me to a party. I'm just kidding. No, I rarely go out to parties and stuff. Like, I would maybe go out like once a month with my friends and some hangout and stuff, but not really a party person from that perspective. So. All right, QQQ is coming down to 290s. Definitely, very, very strong support. We'll see if it actually validates this level, 293. So this is going to be a level to watch. No, I don't trade in the Nifty above. NVIDIA, we've talked about this, but NVIDIA kind of rolling over as well. Apple is down 22 basis points, and Meta also pulling down. And so is Tesla. Tesla's now down to under 270 now. So QQQ, quick, breakdown or validation? In the chat, I want to hear from all 540 people watching. Puneet says parties are not in the budget with this year's performance. That's right, they're not in the budget, right? So breakdown or validation at 293. Because last week we got a perfect validation. We literally got bought up from 293 and we rallied over 3.6%. So it was a very strong rally. Of course, hours later we rolled right back down. So QQQ is coming down to 293s again. So we've got break. Spencer says break dance. Breakdown. Happy with SQQQ breakdown. Validation. Troy says. Then a breakdown. Brennan says, I'll say breakdowns in the market always does the opposite of what I say. So you want the markets to go higher. So pathetic volume since the start. Yeah, it seems like a low volume day, but there we go. New candle just opened up. We'll see where we are for the QQQs and if you continue to kind of roll over or not. And SPY is also probably testing a very strong support. There we go. SPY also 390. That's going to be the level. And we got a nice validation again last week, right? On September 1st. SPY kind of rallied close to 3% from those lows. It was, yeah, close to 2.93%. So Apple really is kind of dragging markets lower now. 155 is where we are. So is Meta. Meta and Apple both. And Tesla also hitting a new low of day. And then we've got NVIDIA also down about 80 basis points. Time for some cash secured puts here. Time to take a look at some premiums and you know, start maybe looking at potential opportunities dollar cost average into. Yes, Arnold, I'd love to take your classes for you. SoFi cash secured put, Shashank. Let's take a look where SoFi is. We haven't talked about this in a while. So SoFi coming down to 560s now. So at about $5 is when I would really start to look into cash secured puts for SoFi. This is a stock that starts to become, you know, very, very lucrative risk reward opportunity. So, you know, December puts for $4 is going to be 25 cents. That is decent. I mean, you can get your cost basis down to even lower. 375 is going to be my cost basis after that one. 25 divided by, so that's about a 6.6% return collateral with a $3.75 cost basis, which I think is very, very lucrative for SoFi. But this will be a lot higher when SoFi is closer to $5. So $4 strike puts are going to be a lot higher. I'm assuming closer to 50 cents. So it's going to be a 12% return collateral. So I would be looking at SoFi again. If it comes down to the low 520s, 510s, $5 is when I'm going to start to sell cash secured puts on this stock. So Caps, your Tesla target is 200. When will you start DCA? So I already have a put on Tesla. So that's the only play I have right now. I'm not really looking at all cost averaging at these prices, like I said, because my expectations are a lot lower. So I already have a put on Tesla, which will allow me to lower my cost basis. So Twitter isn't moving much. Let's take a look. How is Twitter doing? So only down about 19 basis points. Not really moving all that much. Could be because of, you know, how much is already sold off. I feel like, yeah, but I feel like it needs to be a lot lower. There might be some expectations that Elon Musk might still go through with this deal. I know that he's already issued another statement saying that he's no longer interested after the whistleblower event. So, you know, $31, $32 is going to be that next support. I mean, it was already trading at a huge premium, right? And I think Elon Musk was obviously overpaying for this asset at $54.20. It was just an insane price point for Twitter. Like, I cannot even fathom paying that much price to sales multiple on Twitter. It's crazy. So yeah, might be there's some expectation that Elon Musk might still have to go through with that deal. So could be a reason why it's not really moving all that much. Anyway, did you ever experience the wheel strategy since you trade CSP and CZ? Yes, so that's the whole point, right? The wheel strategy is literally just selling cash secured puts if assigned and selling covered calls, and then getting rid of those shares and selling again cash secured puts. So just running that wheel strategy. That's exactly what we do, is just selling cash secured puts and selling covered calls. So 10-year yields are up to 3.3 now. Again, still pushing up here pretty aggressively. Tesla's down to 268 now. Apple really dragging the markets lower here. It's got a big event coming up. Apple, come on, what are you doing over here? We've got the September 7th event coming up for Apple, right? Tomorrow, I think. What time is it? Let me see. Let's see. So, September 14th, well, September 7th is going to be the far out event. iPhone 14 is going to be coming out. Apple Watch Series 8, AirPods Pro 2, and more during the far out event that will be held on September 7th. So, it should be interesting. Who here is actually planning to buy an Apple iPhone 14 when it comes out? Anybody? Looking to upgrade or switch? So Spencer says, I'm Android. Oscar says, no. Young says, I will. Me buying 14 Max. Nice. Alan says, no. Yeah, Apple really... All right, so we did get a breakdown on QQQs. So this right here, again, is going to be that chart. Starting to see a little bit of a breakdown on the Qs. Not looking super strong at all. Kind of extend that volume by price profile here. Again, resistance all the way up to 300. So just another Tuesday. Just another red Tuesday. Nothing new. Nothing to see here. So a lot of these are delayed a little bit, so they will update shortly. But Netflix also down quite a bit. All right, so SPY also got a breakdown, folks. SPY also breaking below 390 here, unfortunately. So next support, really, I think we have some gaps to fill on the downside. So 15-minute chart, we do have some gaps here that QQQ is left in the 280s. So I'll do like a more updated technical analysis on this, but this is definitely a big breakdown on the Qs, starting to make lower lows here, and obviously not looking super great. So I'm still using iPhone 8. Lol, it's working great. Why waste money on buying a new one? Good point. Good point. If it works great, then obviously it's definitely worth using. So SD, what's the fair value of Square? Square, again, doesn't really have earnings right now. It's been a little bit inconsistent, very much back and forth, so we can't, wow, look at this drop here. Apple's down almost 1%, Tesla down to 267. And then AMD also down over 1.5%, down to 134. And then Meta, oof, absolutely getting shattered right now. Netflix down almost 5%, down to 215s. Amazon's down almost 2%. Google, AMD down over 1.6, 1.7%. Yeah, pretty much the entire watch list is now starting to turn red. I'm just going to take a quick look on some things here. Some of the trades that I may want to close out. So Tesla 250s is going to be the level to pay attention to next. We've got lots of support there, in that area, and that support level $253 is going to be that support level to pay attention to. All right, Coinbase, let's see. So Coinbase, again, just slowly and steadily kind of gapped up and then starting to sell off, down 47, 48% from those highs. $40 right here is going to be that next support level to pay attention to for Coinbase. So right there. So if you get another pullback, COVID style, with your fair value and stocks being so conservative, what would you purchase? Just the stocks that we already have, right? I mean, I've got fair values on Google, AMD, Nvidia, Tesla, Apple. Apple is a lot lower though, because I feel like the earnings are starting to really slow down. Still trading at 25, 26, 27 times earnings. Hard for me to justify that valuation. And then, yeah, some of those companies that I would pick up if the prices are a lot lower for them, right? So nothing really would change on that front. So next support, DG for QQQs, we're paying attention to. First of all, I'm going to actually remove some of these levels that are too far up. So I'll kind of clean up this chart a little bit. So we'll get rid of this one. We'll get rid of this as well. We'll get rid of this right here. So, next support really, I mean, we've got some buyers who have stepped in. All right, hold on. All right, so this is where we are starting to break down here. If you pull back a little bit, again, this is the 30-minute time frame charts. We're looking at very short-term, shorter time frames. I will look at 288. 288 down to 287. I got a small gap that it didn't really come down to, that it still needs to fill, and some buyers also stepped in around here at these levels for the QQQs. So 288, 287 would be that level to pay attention to here for now. And then of course, if we do see a much bigger sell-off, $280 is going to be all the way down here. A couple validations. So go ahead and turn this level back into a resistance, and of course we're going to see a breakdown here. Cash to go put on Upstart. Great question. Let's see. Down 2.7%. What can we get on Upstart? So December 16th, let's see what type of return. So insane, right? Just absolutely crazy. I mean, last time I sold $20 puts, we got 30% plus returns on this. So 20 minus 415 is almost $16, so $15.85. So that's about a 26% rate of return, which again is not bad, but Upstart is kind of like in a very tough spot right now. If the recession gets worse and interest rates keeps going higher, well, on one end, they should benefit from it because interest rates on loans, all that stuff is going higher. But if the recession gets worse, then people are not going to be there to borrow any money. And as a result, the revenue, and we're already starting to see the profitability is going down. So I'm interested in 1250 minus 125, 1125. So that's going to be an 11% return on collateral for the next 90 days, 100 days, 3 months, which is not bad. I mean, if you analyze that, that's going to be, well over 33%, 11.1111 times 3, yeah, over 33%, which is good. But again, it comes down to whether Upstart is a stock that I want to be bullish on, even at $12. That's going to be about a 50% decline from here. What do you think? Can Upstart fall 50% from here in about 4 months till December? What does everybody think? Another 50% decline would put this stock down over 97% from its all-time highs. Just insane. Crazy. But can it drop another 50% from these levels, come down to like 1150s? It can, right? It certainly can. I think it can. It's got a couple earnings. Well, it's only got one more earnings coming up this year. So I would say 20 to 25% is more likely, but it's a slippery slope. Yeah, it definitely can. So, and we don't have any strikes lower than 1250. I mean, if you were looking at, sub $10, then maybe I would consider that one, because the returns are good. It's not like the returns are bad. Return collateral is really good for Upstart. 11% for 90 days. I will take that deal any day, but it's Upstart, So if the earnings had not deteriorated as poorly as they did in the last couple earnings call, I would have taken this deal 11% all day. But it's just that they literally just went from very strong record profitability down to like now reporting losses. It's just unbelievable. So, all right. Let's take a look at VUG. So how is Vanguard doing? So, all right, down about 1% right now. It's kind of following a very similar pattern as the NASDAQ and the S&P, right? I mean, it's down a little bit over 28%. So I think it's following the same pattern as the NASDAQ. Nothing really to go over. I mean, the technicals will not really make any sense. We're just better off looking at the NASDAQ and kind of understanding how it's doing to better understand where VUG should be trading at. So Apple now sub 154, and Nvidia down to 134. So Fiani, how much am I willing to pay for Lamb Research? I actually did a video on Lamb Research. I can't remember what that intrinsic value was. I have to rewatch it. It's going to be on the spreadsheet as well. But I'll get back to you on that. I have to take a look at that. What estimates I had for earnings growth and PE multiples, and then I can get back to you what that intrinsic value is. Brandon says, I'll buy Apple at $75. Man, I love it. I love it. This is how we need to be. This is how we need to think about stocks. We don't need to, we don't have to brag about, oh, I paid over $1,000 for Tesla. No, that's not something to brag about. I like what Brandon says. I'll buy Apple at $75. That's how frugal we need to be in the stock market. It's a ruthless game, and we need to be as frugal as possible, as low as possible. I want to get the best deal in the markets, right? So to get the best deals, you want to pay the lowest possible price for the highest quality asset. So figure out what that high quality assets are, figure out what those high quality stocks are, and you want to pay the lowest possible price. Literally, I would be so excited to get those prices. So Shamir, my price right now for Apple is about 115, 120s. That's the level that I'm really paying attention to. If it comes down to, I would love to buy it there. Yeah, see, Overrod says, I will pay you $5 for that $10 bill. See, that's what I like. That's what I like to hear. That's how I want you guys to think, when it comes to the markets. Yeah, so Hassan, you bring up a great point. I think the all-time highs are not that relevant anymore. I think a 90+% drop just goes to show that the valuation really got overextended during COVID, and it was just like an insane amount. So moving on from here, I think it's going to move up. If it does, if the business gets better with their loan activity and everything kind of going up, it will move up in a more consistent, more stable way, as opposed to the huge rally that we saw, like a 2,000% increase that it saw during COVID. So I think you bring up a great point that it's now going up in a more normal setting. So John says someone should pay me to take their Apple shares. Well, look at cash secured puts. You're gonna get paid to simply wait for the prices to come to you, and when the time comes, you will be buying at your desired price level. So Apple really is just. Look at that drop here. 151 is that next support, everyone. So this is the level to pay attention to for Apple. RSI is really coming down. So is the MACD. So 151. Again, I'm going to take a look at NVIDIA's CSPs. Again, the premiums are going to start to go higher on a red day like today. So again, I would say use this day on some of the stocks. So like, Cool is asking, Google at 105, good to start a position. Look at cash to good puts. Look what you can get for Google with a $100, $90 strike 1 month out. See what the premiums are. Just buying at the market price at 105, 106, and then you're just kind of like, when is the stock price going to go higher? Instead, I would say just look at cash to good puts, right? These are great ways, especially in a red market. So what we did was, again, just as a reminder, when markets are really high and the volatility is really, low, when you get that combination of markets being overbought and volatility really low, that's the time to do two things for me personally. It's a time to be trimming some of your trades, right? Locking in some profits. By the way, we haven't talked about the volatility. It's up almost 6%. Time to take some profits and sell covered calls, right? Covered calls can be great hedges against your potential downside. So, last week I closed covered calls. Tesla hedge closed for 82% profit. Google hedge, I had another hedge on Google as well. Closed that one as well. And now when that's reversing, when that is actually shifted, right? When that's flipped back, when volatility is high and the markets are lower from an RSI MACD standpoint, then you want to look at selling cash to good puts and start buying dollar cost averaging again, right? So that's how I go about it, right? When I'm just looking at overall market conditions and where I want to be a buyer versus where I want to be a seller of stocks. So, if you're thinking about buying stocks, if you just want a dollar cost average and nibble in a little bit, sure, you can buy a few shares. But if you're actually starting to build out a position, 100 shares at a time, I would recommend looking at cash to good puts and different strikes. You can lower your cost basis and you can get the premium simply by waiting. You don't have to do anything. So for NVIDIA, December 100 is down to 385 right now. Still hasn't really moved up all that much. Chente, the weekly on options have a greater ROI. Yeah, I mean, they definitely do. I mean, day sale expiration is only 4 or 5 days. They tend to move a lot faster. So you can definitely, benefit from that quite a bit. So technicals for SD. Let's take a look at what that stock is. All right, so it's got a very nice uptrending sort of pattern here. So I mean, since 2020, it's just been pushing higher, validating that 200 simple moving average. It kind of feels a very similar pattern to what I've seen for a lot of energy companies, right? XLE almost has an identical pattern, right? It's got like a peak from back in June and then a lower high. And then we've got, companies like XOM, very similar pattern, a peak from back in June and then a lower high. Chevron, a peak from back in June and then a lower high. NSD is kind of like almost identical, a peak from back in June and then a lower high right now. So overall, the context, it's still making some nice higher highs and higher lows, but now recently though, it's starting to kind of obviously not go as high as it did the previous time, so it's making some lower highs. Oh, the 10-year yields. This alert, probably the last alert that we wanted to see. 3.35%, so pushing up. It's up 3.7% today. Incredible how much the yields have pushed higher. What's going on with other yields? I'm interested in that too. Let's just reload this page. So yeah, all yields have been pushing higher. 20 is now at 3.7, 3 years up to 3.5, 2 years up to 3.5%, and then 30 years up to 3.47. So pretty much all yields are on the move, going higher right now. All right, everyone. So thank you so much for joining in. That is going to be it for today. Appreciate it. Make sure that you drop a like. We better be at over 200 likes right now. So let's take a look. We are at 178. Actually, 199. Come on, we just need one more. But yes, make sure that you drop a like. I really appreciate it. And of course, subscribe to the channel if you're just joining us for the first time. We talk a lot about fundamental analysis, technical analysis, stocks and options, and macroeconomics as well. So those are the 4 to 5 key areas of focus on the channel here. We talk, about pretty much a lot of things. So thanks again. Patreon, Discord link is going to be down in the description below and also pinned up top if you are interested in joining. The first week of the month, usually the best time to join. So we'd love to have you on board if you want to get those options alerts, trade alerts, all that stuff. So as always, check out my YouTube shorts as well. Yes, so I've been posting some YouTube shorts. We'll be posting a lot more short form content. If there's anything you'd like to see on a more short form basis, maybe 60 seconds, 50 seconds, 40 seconds videos, any topics, let me know. And I'd love to, do videos on those as well. So thank you. Happy investing. Have a great day. And I'll see you all in the